Alrighty then, let's get started. Thanks for joining us for another AMA, whether you're on Discord or Twitter. See a lot of new faces today, which is great to see. Welcome. Looking forward to your questions. If you have questions, just type in the AMA questions channel on our Discord. And I'm going to get right to the first question. So we have Nallo Road asking, seems like revenue is on a consecutive decline over the last several months. I know we are in a bear market, but it's not like conditions have gotten worse over that time. How does that compare to broader trading volume trends? Is it because there is less aggregate market trading volume? We are losing market share, or the fee percentages are declining? What are you all doing to try to adjust and get revenues up? Thanks. Yeah, so indeed, the revenue quoted in dollars has declined over the past few months. Although I think our lowest month ever was back in October, I believe. So it's not like it's straight down, but yeah. If you look at the past few months, it has been declining. So why is that? I think there are a few reasons. One is that I'm not sure about volume. Volume, it's kind of gone up and down. It's not as straightforward as like straight down, but that could be contributing to it. I think a significant part of it is that the price of SOL is down. So the reason that would affect the revenue is because we're quoting our revenue in dollars and not in like SOL, for example. If we were quoting it in SOL, actually it might have been going up, because as SOL gets cheaper, our revenue in SOL would probably go up because we'd be more easily able to acquire SOL. But yeah, so the fees we earn, at least for our V1 pools, are in the form of LP tokens, which are composed of both SOL and USD. So if SOL goes down, then when we withdraw the profit, the value of our fees, which again are in SOL and USD, are going to be down because the SOL portion is going to be worth less in dollar terms. And so when SOL price is lower, revenue tends to go down. And with our V2 pools, it's kind of interesting how they work, because if you read the article where we announced our V2, the way it works is that it basically collects all fees in USDC. I'm kind of simplifying it, but that's essentially what happens, is that we accumulate all the fees denominated in USDC. So the APR works kind of interestingly, because it always counts the revenue in USDC, but then the value of the pooled assets is constantly shifting, and that's used as the base to calculate the APR. So what might be a good APR right now in dollar terms, given the current value of the pool, might in the future look like a low APR if the value of SOL goes up by, say, like 5x to like $100 or something. Then like looking backwards at the USD value of the fees we generated, it might look quite small. And so as the price of SOL goes up and the value of the pooled assets goes up, that APR will probably tend to decline, merely because the revenue generated in the past when the value of SOL was lower will look smaller, because we're calculating the APR based on the current value of the pool. Hope that made sense. So that part is kind of weird. It's a difference from V1 because in V1 the fees are in both Sol and USDC, whereas in V2 all the fees are USDC. Actually, yeah, I think I kind of got away from your question, but yeah, so the volume and the changing value of Sol are two considerations. Like you say, we're in a bear market, and obviously that contributes to it. I think that's the gist of it. And let's see, there was a second part to your question. What are you all doing to try to adjust and get revenues up? Yeah, so this is something I've talked about in like previous AMAs, but the main thing the team is doing right now is working on the market making engine and adjusting parameters. So the parameters we can adjust are fees, the price curve, the target, which is like how much Sol we want to have in the pool, and even the price we quote. So there's a lot of trial and error that we're doing and optimizing. And I think people who have been paying close attention to the APR of the pool will notice that over time we've done increasingly better. There was a time when the APR was much lower, like 300 something percent, I think. And right now we're like 500 something. The market making profit has improved. I think it was negative at one point. Yeah, so that all that trial and error continues. And another thing to get revenue up is creating new pools. A while back we started the ETH USDC pool, and that has been doing quite well, much better than the V1 pool. Right now you can only see it on the bird's eye, so you can only like see the volume and not the profitability. But yeah, once it's ready, we'll add that to the pools page. In terms of volume, like just like all our other V2 pools for like Sol, Stake Sol, MSol, etc., the V2 pool is generating more volume with less liquidity. So great to see that. Let's see. And then we do plan to open a bunch of smallish pools like MSol USDT, StakeSol USDT, WBTC USDC. I think we're going to do an ETH Sol pool too. We're still testing the bonk. So unfortunately the bonk, for the time being at least, it's not really profitable. And like I mentioned last time, this is probably mainly due to price discovery being on DEXs rather than centralized exchanges. And that renders the use of an oracle to be basically meaningless. We have no advantage because DEX price moves faster than the SEX price. So we'll keep that pool open with the tiny amount of liquidity that we have in it, just to keep monitoring it. And if the situation ever does change and we notice that, hey, now the pool is profitable, then we can increase liquidity. And we can borrow funds from the bonk team, likely, because they seem to be on board with that whole thing. And yeah, now we're in talks with the Helium team about borrowing HNT from them to open a HNT USDC or an HNT Sol pool. So that would be similar. It would be a V2 pool, so we could market make for their token in a delta neutral manner and be able to borrow the tokens for free, not have to face any like borrow APYs or liquidation risk or have to put up collateral or anything like that. Other than we might send them Lifinity tokens from our treasury as collateral, just, so just to assuage any fears that like we're not going to run off with their tokens, even though, that would be kind of crazy if we did, because like we're borrowing a very small amount from them anyways, so we have much more to lose from just stealing their tokens anyways. But yeah, so that's some of the things we're doing to get revenues up. Improving the performance of our existing pools, which is especially important for our larger pools because they account for the majority of our volume. So yeah, kind of like 80-20 rule. And then also opening these smaller pools. Yep, I think that sums it up. That answered your question. All right, next question. Actually, let me take a drink real quick. All right, next question. We have WM. Obviously, some people may want to dump flares when the streaming of Lifinity to flare holders stops in mid-May. Does the team have any plans to prevent such from happening? Are there any new utilities coming for the flares? Thanks. Yeah, so the Great Unlocking is going to happen on May 16th. That'll be 1 year from the day we began our staking and locking program. And flare stakers can unstake their flares whenever they want, but those who locked it, which I believe is about 1/4 of holders, so something like 2,500 flares, are going to be unlocked on that day. And so there's been a lot of discussion around what price action, if any, we're going to see when that happens. Is there going to be a mass dumping of flares? So, let's see. Do we have any plans to prevent this from happening? Short answer is no. To elaborate, basically, I think the right attitude to have here is to embrace the dump. I know you all embrace the pump, but with flares, you also get to embrace the dump, believe it or not. So to elaborate on that, flares are interesting in that it's both good when price is high and price is low. It just depends on what you're looking for. So if price is high, that's a good opportunity for you to take profit by selling your flares. And then when price is low, it's a good opportunity to buy. And this is especially the case for flares and not so with other NFTs, because flares are backed by actual assets. So they have an intrinsic value to them. Their share of the Flare-owned liquidity and the idle assets owned by Flare DAO. So that intrinsic value was based on the last balance sheet update that we gave a few weeks ago. I think the intrinsic value of Flare was something around 7 SOL, a little bit above 7 SOL. So yeah, when price very temporarily did dip below that, you saw it get bought up real quick. And yeah, like you don't see this with other NFTs because they aren't backed by anything, or at least the vast majority of them. So their intrinsic value, if we were to call it that, is 0. And so for that reason, like, we're not really worried about dumping. Our buyback wallet has over 1,000 SOL. And so if price does go low, like, that is a great opportunity for the buyback bot to reduce the circulating supply at a great price. So like we're super down for that. And even if it like stays low, then it's, I mean, in other words, like it stays below intrinsic value. Like, I mean, hell yeah, we're happy to buy, like continue buying at that price. And like if it's below intrinsic value, it's probably even worth it to use our idle assets to begin buying flares at that price, because basically that will increase the intrinsic value of each flare that remains in the circulating supply. So yeah, TLDR, like we're very much not worried about it. And like also like my personal opinion is that we're likely not going to have an opportunity to perform these cheap buybacks anyways, because other people are thinking the exact same thing, and they're probably going to buy them if they go below intrinsic value. But that is just my personal opinion, obviously not financial advice, blah, blah, blah. Are there any new utilities coming to flares? There are no plans for any. The flares will continue earning revenue just as they always have, and they will continue to be bought back off of the market. So the circulating supply will continue to decrease, and half of their revenue will continue to be reinvested. And that combines to say that the intrinsic value will continually go up, and so will the speed at which buybacks are performed, assuming price doesn't moon. So yeah, hope that answers your question. Okay, next question we have Pedro Norte. It says, is there potential for the protocol to ever work on multiple blockchains? One of the biggest criticisms of Sol has been that its top validators own over a third of the coin. Yes, this is like the number one question, it seems. I feel like we get this question every week. Very popular question. Today specifically, it reminds me of a tweet I saw either today or yesterday where I think it was Raj of Solana, one of the co-founders, mentioned, was basically saying like the real way to success is to focus on a single chain rather than spreading thin over multiple, or something like that. I mean, he said it much more elegantly, obviously. But yeah, that is kind of our attitude, at least for now. Like we still are focused on Sol because there is a lot to be done. And it is a faster way to increase our revenue rather than going to another chain. Going to another chain is probably a significant undertaking, and depends on the details, how much has to be done, like whether we have to code from scratch, for example. But yeah, going cross-chain is quite complex, especially for us because of our reliance on an oracle, and also because we are very sensitive to fast block times and cheap fees. So yeah, like we're on Solana for a good reason. It's because Solana is like the clear leader for both of those things in terms of having a good oracle that updates every slot, and the block times are fast, and this allows us to avoid being front run. But yeah, opening Lifinity on other chains is not out of the question. It's something we're definitely considering, keeping an eye out on, talking with teams about. I feel like we've talked with at least 4 chains. Yeah, so like there's even interest from like other chains for us to build on them. But Yeah, so there's a lot of tricky things involved. I mean, I kind of brushed over those tricky things, but let's see. So the Oracle part on Solana, Pyth publishes every slot, like I mentioned. So there's nothing we need to do to make the price update. But on other chains, Pyth uses the poll method. So if you want price to be updated, you have to send a request via a transaction. And then once that some transaction is processed, the price will get updated. But that introduces additional latency. And latency is bad for us because it increases the likelihood of front running, or us updating our prices too slow. So actually, like us eating toxic arbitrage, where we're using a stale price instead of the current price. So avoiding that is very, very, very necessary to maintain profitability. And to avoid that kind of toxic flow, we would need to basically the slower the block time, the wider our spreads. So we can't quote as competitive of a price if there's more latency. And if we're not quoting as competitive a price, that means we're not going to get as much volume, which means we're not going to be as profitable. So, yeah, so that's like probably the most important thing is, whether it's feasible or not. And then there's the question of like, how much development would this require? For some projects, it's going to be next to nothing because you can just port your Solana code as is to the new chain. Let's see, what was it? Nitro, for example, I think is doing it on Sui, I believe. I get confused about these chains. But like they're using the SVM, so we would be able to use our code as is. That'd be the ideal case. Otherwise, we'd need to rewrite it from scratch. Oh yeah, and then some other considerations are like, are there other dexes on the chain? Which, sometimes is a legitimate question when the chains are like very new, like Aptos or Sui. If there are no other dexes, or if like the volume is like minuscule, first of all, if like the volume is minuscule, then it's simply not going to be worth it if there's just not much to capture anyways, because like no one's trading there. But even if there is decent volume, then you'd want there to be like enough liquidity for us to be able to arb against. Like for example, on Solana, arbitragers get to arbitrage between arb pools and Orca and Radium and a bunch of other protocols, and they have tons of liquidity. And yeah, so that's important for us. So yeah, we would also want that on other chains. So like those are some considerations. There's probably some others too that I just didn't think of right now. But yeah, going cross-chain is complex. We're definitely open to it, but first and foremost, we're still focused on Solana and continuing to build there. Simply because we think that's where the biggest opportunity still lies. And also it's like the most, it seems like it has the highest ROI. Just because like, everything is already built. It's just a matter of like opening new pools and optimizing existing ones for the most part, and like creating new partnerships, stuff like that. So yeah, that's basically our thoughts and approach to it currently. And for all I can tell, like Solana is just starting to like do very well. Technically, I mean, like the chain is like super smooth right now. even the last outage, it was only because of a failed update. Like there was a bug in the new version of the code, and has nothing to do with like the existing code being insufficient to handle like traffic or whatever, which used to be the problem, right? But like those types of problems have seemed to all have been solved with like quick and localized fee markets and stuff. So like I wouldn't be surprised to see like Solana volume start to increase. I don't know what would be the catalyst though. But like personally, you know, like I don't want to use any other chain than Solana unless I have to, because it's just such a great UX. Hopefully some app nails it and kicks off some mass adoption for blockchain as a whole. We'll see. Anyways, I'm ranting. All right, so next question we have Shardo. Are there plans to add more metrics to the dashboard, or is the dashboard complete? It is not complete. We have a dashboard channel actually in our Discord. Maybe I'll just link to it right now. Yeah. And yeah, so in there we have a bunch of ideas. In the past, I've asked the community, like, what kinds of things do you want to see? Right now we have like the basics, like volume and fees and some token distribution stuff and buybacks. But there's like so much more that could be created. So yeah, that is definitely still on our to-do list. I mean, there's like a lot there. Maybe I'll just go there real quick and see what we have left. So some things yet to do. Percent of VE Lifinity that is unlocking. A historical graph of that. And APR for 4-year locked VE Lifinity. Right. A historical graph of that. Yeah, so basically like our charts and their numbers, our monthly charts that we announce on Twitter. But yeah, turn that into a graph. APR breakdown into the trading fees, market making profit, and market making as a service and liquidity as a service. It's probably not that important right now since like trading fees are like, I don't know, 99% or something. The number of VE Lifinity holders. This is like something people occasionally ask because there's no way to easily check this on chain unless you're like familiar with the VE Lifinity program. Then we have TVL as a bar chart of protocol-owned liquidity and LPs. Distribution of protocol-owned liquidity and LPs across the pools. Percent of total revenue by pool as a bar chart. And then we could do some stuff for flares. The buyback stats could be turned into charts, or the staked, locked, or idle flares. I guess we won't need that since that program is coming to an end. But yeah, those are some of the ideas, and like, I mean, that's probably not even everything. Other things could be done too, so. Yep. All right. And your second question, also believe there was a plan to revamp the website in React. Any update on that? I feel like the current website homepage rewards page could be more geared towards beginners, and making it simpler would help increase the Lifinity holder base, which may not have revenue impact, but have other positive side effects. When you're doing it, please ask for inputs from the DAO. Yeah, we've definitely like taken notes along the way because people have mentioned like things to do that would make the interface better. And I've passed each thing along to the devs as they've come up. So yeah, we are taking notes. And yeah, I mean, we want to continue to receive feedback from you regarding that. So thank you to everyone who is providing feedback for the UI or anything else, really. Always appreciate that. Okay, so yeah, so we still have a plan to revamp the website in React. To be honest, I'm not super up to date on the progress with that or where it lies in the priority list. I know at one point one of our part-timers was working on it, but yeah, right now I'm not sure. I can ask about that later and get back to you. So if interested, maybe remind me after this AMA, and then I can get back to you with how it's going. Let's see. Could be more geared towards beginners. The home page and the rewards page. Yeah. Homepage, I think, is, as far as I remember, it's pretty beginner friendly. It is like, isn't it like a introduction to like Lifinity, what Lifinity does, like giving the broad overview type of thing. The rewards page, yeah, it does confuse some people. It's tricky because like the tokenomics is what makes it complex. So I guess like you could simplify it, but then that could cause other types of confusion where you're like leaving out details. I don't know. I mean, it's kind of hard to talk about it without talking about specifics, I guess. But I mean, I do agree that, yeah, the rewards page can be confusing for beginners. But I feel like that's usually because they're not familiar with the tokenomics and how the three tokens interact with each other and what they mean. But anyways, yeah, I mean, like definitely open to ideas for improvement. So yeah, if you do have specifics, please let me know. All right, well, we have, thanks, Shardo. We have temporarily reached the end of our questions. Looks like nobody on Twitter. Everyone's on Discord. I've talked a few times about like not doing it on Twitter. I wonder if that's what I should do. I'm not sure if it's accomplishing anything. Shout out to these people I usually never see: Broski, Thugs Yacht, Janana, Pero, Matishi, Alice K. And then more of the regulars that I've definitely seen before: Sally Jack, Just Me, Smitten, Shardo. How's it going, everyone? I guess one of the interesting things going on recently is there's been this discussion around Lifinity DAO buying out the Flare-owned liquidity. So basically what would happen would be like Lifinity DAO would exchange some Lifinity from its treasury for the Flare-owned liquidity, the liquidity in the pools, and probably also the idle liquidity. The question, of course, is like, at what price should such a trade take place? In theory, it seems like there should be a price at which both parties can be satisfied. But yeah, pretty complex discussion, to be honest. And I assume it will continue for quite a while. There's a channel in the Flare governance channel for those interested. Hey, Promino joins the chat. What's up? Uh, pretty quiet AMA today. It's been a lot of buying and selling of flares these days. I don't know if people have noticed. Ever since price grazed the intrinsic value, or maybe went below it, it's been a lot of cycles of people selling and people buying in like batches. It's been interesting. And of course, the Tensor LP position controversy continues. It's so controversial. Reintroducing flares is very much hated by some. All right, we have Thugs Yacht Club asking, have you seen any impact since the listing of the collection on decals, or not at all? So to be honest, I haven't kept a close eye on activity on decals, but I haven't heard it brought up even once ever since the listing, as far as I can remember. So I would probably say no. Yeah, I think the thing with like flares is that it tends to be because it's not like a hype based collection like many NFTs tend to be, where they'll occasionally have some hype announcement that causes price to skyrocket or plummet. And it's those scenarios where options make a lot of sense, I think. Where you can expect there to be significant price moves. But flares tend to not be like that. Price tends to move more gradually, or at least that is my impression. So yeah, it's kind of like if there's not that much option activity for flares, I would think that's the reason. But yeah. But maybe other members know more. If they are, I don't know, do you guys use decals? Maybe even not for flares, for other collections? Let's see. Promino asks, are we doing anything to celebrate the 1-year anniversary? Yeah, kind of thought about it, but didn't come up with any ideas for things we could do. Do you have any ideas? Promino says decalls is PvP. There needs to be a counterparty on the other side to take the bet. So far, it needs to gain more traction for more people to take a side there. Yeah. Options, I mean, like pricing options is super tricky. And probably even trickier for NFTs. So probably, I assume like the spreads are like very wide. And if spreads are very wide, if you're the taker, like you need like very high conviction to um, take any liquidity because yeah, the spreads are massive. So you need to be very confident in your view. Um, Janana says, pretty sure Decalls pivoted from their options platform. Okay. Didn't even know that. Yeah, I mean, like, even options for normal assets, or I should say, fungible assets, like Sol, like, even those options, is really hard, I think, to, like, get volume on them. I think there's just less demand for it. I mean, I don't. I've never traded options, so I'm not going to pretend to like, know everything about them. My impression is that like in the retail world, people like options because you can get massive upside with a small investment, albeit very low probability, of course. And that's what attracts people. It's kind of like leverage, except you're not leveraged. You're just betting on like very low probability events. And like, so I guess it's more like a lottery. Except your odds are probably much better than an actual lottery. Because the actual lottery is just a scam. The government sponsored scam. To prey on the financially illiterate. But yeah, but like with crypto, because everything's so volatile, like even just buying a crypto token is kind of like an option in the TradFi world because it's so volatile. So you do have like exposure to high upside. And so in the crypto world, it seems like, you don't need, or like options don't serve a unique role the way they do in the TradFi world. That's my naive noob take, which may be totally wrong. Anyways, Pramana says, any progress on the new V2 pools? The last one was ETH-USDC incident. It's been 2 months since the StakeSol USDC and MSol USDC. Yeah, so we continue to work on the parameters of those and improving them. And that is important because like these will be the largest pools. The Sol, StakeSol, MSol, and ETH. So optimize them to make sure they're like earning as much as they can. And then we want to move to opening more pools. So basically, our view is that like optimizing the pools is higher value than opening new but much smaller pools, at least for now. Once they are optimized, then yeah, opening new pools becomes the new highest value option for us. The pools themselves are doing great. Yeah. I guess to like really see that, you'd have to like be paying close attention to the APRs and how they change as the SOL price changes. But yeah, they're doing quite good. Better than before, certainly. Janana says it's some simplified degen up or down now to bet on Solana price action. I liked it more before, but this space seems to degen for a vast amount of liquidity to go into options for now. Really? Vast amount of liquidity to go into options, huh? I guess I'm just not aware. Promino says, any update on the NFT wear merchandise? Well, let's see. So we did the shit, what was it called? The caps. The Solana caps, but they weren't called caps, they were called something else. That one project that like works with Solana validators has the logo on there. Snapbacks. Thank you, Shardo. So Solana snapbacks, we had that, and then we did the thing with the other NFT merchandise place, which, to be honest, like felt like a kind of a mediocre provider, or like at least not very professional in the way they were interacting with me, anyways. I can't speak to the quality of their wear because I didn't test anything. But at that point, I was like, damn, if we're able to like get anything out, that'll be a win. Because like I'd been trying for months with these other projects who like partway through would ghost me and like nothing was getting done. So I was like, all right, if you guys are gonna like set up the store and like make sure everything works, that's good enough for me for right now, anyways. So like I'm sure like definitely we could do better things. Oh yeah, and like part of that one was like they couldn't handle our colored NFT designs. So it was just like black and white stuff. So it was, and like the items were pretty limited too, so much less flexibility than I would have liked. Because like we did that whole vote for like what designs do we want on what items, and like we got it down to all the details, so we were so ready to go until we got ghosted. So I don't know, is there like do people know of any NFT, or I guess it doesn't even have to be NFT, but like merch projects that would be able to work with us? Like basically what we're looking for is, you know, a merch store that will take in our designs and items, pair it up with the ones that we're interested in, have like everything figured out, the logistics. Like we just give them the designs and then they set up the store and deal with the payments and all that. Yeah, if anyone knows of any that they think could work with us, just let me know, and I can talk with them. Yeah, I just don't know of any. Janana says, well, I think most don't understand how to option trade, hence their pivot. Right. Oh, so you're saying they pivoted to the degen up or down system because that's like simple and people can understand it? Yeah, I mean, like even if that is the case, I would still be surprised if there's like vast amounts of liquidity. If it's just like an up or down bet, it seems like people would mostly just, you know, buy Sol. Like if they think Sol's gonna go up, most people just buy Sol rather than these options. I mean, I guess they could use it for shorting Sol if they don't know of any other way to short Sol. But yeah, on the long side, seems like they'd just like buy Sol. Promino says, the idea for borrowing HNT with Lifinity from the Treasury as collateral is interesting. I wonder what would be their considerations. Did you also offer market making as a service or liquidity as a service with their team? Let's see. So like we could pitch liquidity as a service, probably. But in the case of liquidity as a service, we would need to hold their token. So I guess the difference would be in liquidity as a service, we have both price exposure to HNT, but we also get HNT token rewards. Whereas with the deal I'm talking with them about right now, we don't have price exposure to HNT, but we also don't have HNT token rewards. In my mind, I like the second option better, simply because it's like less risk, it's less volatile. It's like more focus on the fees. Just get the fees and like don't worry about anything else. Whereas if you have price exposure, you know, like HNT could go to 0. I mean, like probably not likely, or like even if it doesn't go to 0, you know, like it could decrease, its value could decrease enough that it erodes any of the HNT rewards plus any fees and market making profit we've generated. So yeah, I feel like it's the better option to just borrow HNT from them for free and then use that to generate yield. It's also nice because once we create one kind of deal like this, then other projects see that and will become more interested in it. And that kind of deal is more easy to form than a liquidity as a service, probably because they don't need to offer their token as liquidity mining, which, you know, has gone out of fashion basically in this bear market. So if they're just lending us tokens temporarily, that's much more palatable. So yeah, that's why I'm talking. I'm talking about this with them. And also, this is like only possible because we have the V2, right? I think when we initially conceived of market making as a service and liquidity as a service, we just had the V1 pools. So this option wasn't available. But yeah, this is like a new option that I think makes a lot of sense. It's like basically doing what we explained in the V2 article about how to go delta neutral. But, you know, none of the options were great. You know, we have to go on a centralized exchange to short the tokens with decent liquidity, or you can short it on some perps exchange on a DEX, but probably liquidity isn't great. And there's all that smart contract risk, or you could borrow it from a lending protocol, but then there's the borrow APY and liquidation risk. It's like also complex, right? And if you just borrow tokens from the team, like you just bypass all that complexity, which is like super nice, to be honest. So yeah, if we could do this with a bunch of teams, that could be pretty dope. Not gonna lie. But yeah, it's still reliant on like there being plenty of centralized exchange trading volume for the token. The centralized exchange has to be the place of price discovery. So, and there has to be, you know, like at least a decent amount of volume for the token. So it's not like we can do it for every project, but the more major ones we should be able to. So yeah, that'd be great. Thugyot says, in quotes, dumb it down. Nice. Yeah. Yeah. Promino says, every time we open a pool with a new token, do we need to open both V1 and V2 pools? Or can we just go straight with V2 pools? Yeah, I think we can just go straight with V2 pools. I think I've mentioned before, but like we're basically trying to gradually migrate liquidity from V1 to V2. And like we could just do it in one go, but the effects of that aren't clear to us, which is why we're doing it gradually. Because in a sense, like, you know, the V1 and V2 pools occasionally compete for the same volume. And so, but then they're also like, they also get volume that is independent of the other pool. Because although they use the same Oracle price, they have different price curves and their pool balances are not always the same. So yeah, the effects of like just like immediately getting rid of V1 is not clear, and then, yeah, that's why we're doing it gradually. And like I mentioned, like way back when we first created the V2 pool, it is possible that like optimally we keep both V1 and V2, but it may also be optimal to just have V2. So like, you know, we're gradually testing that by gradually migrating liquidity. But yeah, if we open new ones, like I think it's looking likely that we probably just need V2 pools. So probably we will just create V2 pools for like totally new pools. Yeah, it's not like at all obvious that like V1 pools are indispensable in some way. I don't think they are. So yeah, I think we'd just create V2 pools. Yeah. Give me a second. Okay. Promino says, every time we open a new pool, oh, never mind. Isn't the V1 pool there to capture bigger trades while the V2 pool is to capture smaller swaps? Yeah, so like that was the initial thought, like, right? Like why it may be possible for us to for it to be optimal to have a V1 pool as well. But like as we increase the liquidity of V2, like V2 is more able to capture larger trades, and then V1 is not as able to capture the larger trades, like simply by virtue of it not having as much liquidity as it once had. And so the thing is, like, yes, V1 pools can capture larger trades, but it's also true that those trades are very infrequent. So they're not vital in any way. And also, very large trades can sometimes like not be a good thing. It's like very specific to what kind of trade it is. So usually if it's just a retail trader and you're just trading massive size, that's a good thing for us because it's just uninformed flow. But then, for example, a thing where it could be negative for us is if there's a large liquidation. So a liquidator just like sells a bunch of some asset. Um, and that trade is not like indicative of any price movement. It's just a liquidation. It's not indicative of like where price is going. Um, so in those cases, like it's possible for, like, for example, say they're liquidating a bunch of SOL. So they sell a bunch of SOL to us. And then immediately or soon after that, the price of SOL starts to go down. Not because of the liquidation, because that's like relatively small still. Like the size of our pools compared to like all the liquidity in the market is quite small, right? So like we're not the place of price discovery. But yeah, so say they sold us a bunch of SOL. So now you have a ton of SOL and our pool is imbalanced. And then on centralized exchanges, for completely unrelated reasons, price of SOL starts to go down. Simply just price discovery happening. And then we're stuck with a bunch of SOL as price is going down, which really sucks. So unfortunate things can happen like that. And so capturing large trades can be valuable. It can also be like risky. So like the same is not really true for like smaller trades, right? Because it's much easier to rebalance the pool quickly after that. Like if your pool is imbalanced because of a small trade, so now you have like 50.1% SOL and 49.9% USDC. It's like not a huge deal. Like even after that, if price of SOL starts to go down, like it's not a big deal at all. Whereas, if a large liquidation happened and our pool is like 75% SOL and 25% USDC, then it would hurt us a lot more. Yeah, so like all that to say, capturing bigger trades could be a thing, but it's not as obviously a good thing as it might seem at first glance. Yeah, I hope that made sense. And so for that reason, like V1 pools, like if that's their only merit, is like they just have a shit ton of liquidity, it's like not that big of a plus. Yeah. Ipramino says, in terms of priorities, which ones will be open first? Let's see. So ETH USDC is already open. Bonk USDC is also open. ETH USDC is doing well. Bonk USDC has not done well, so it's only remaining open with a small amount of liquidity for like monitoring purposes in case it does become good in the future and we want to add more liquidity. Then HNT USDC and WBTC USDC. The order of those is probably it could be like more dependent on the response of the Helium team. Yeah, I mean, like I don't know how fast or slow discussions in their compliance team would be. And also I don't know how their like governance works. So can they just make a team decision to like send us HNT tokens for that purpose, or do they have to do like some governance proposal thing? I don't know. So yeah, I don't really know the timeline for that one. WBTC probably fairly soon. But it might be, we might do like MSOL USDT and ST Sol USDT We might do those pools before WBTC. Not sure. Yeah. I noticed that the volume for WBTC and Solana is the smallest among them. Right. For that reason, we might have the MSOL USDT, STSOL USDT first. Yeah, I don't know. Wonder who's trading Bitcoin on Solana. Sometimes I hear this like this some people say like Bitcoiners like Solana or something. I have no idea how true or false that is. I think the justification I've heard is like there's always been this like strong antagonism between Bitcoiners and Ethereans. Especially when like Ethereum started the ultrasound money narrative because it kind of competes with Bitcoin trying to be sound money. But then Sol is like, it's not really trying to be money. It's just like hyper optimized tech, essentially. So in that sense, like it doesn't overlap with Bitcoin. So yeah, I've heard that Bitcoiners like Solana. But I'm sure that's definitely not universally true at all. I'm sure there's plenty of Bitcoiners calling Solana shitcoin and throwing all the usual criticisms. Anyways, Promino says, interesting. What would be your consideration for opening STSOL USDT when we already have STSOL USDC? Basically, if it has volume, we'll take it. I mean, same as like our Sol USDT pool, and we have a V2 pool for that too. It has volume. I mean, not nearly as much as Sol USDC, but I mean, USDT is still decently popular. Not as popular as USDC, but some people still like it, and it's got a decent amount of usage. So yeah, these USDT pools can generate some decent volume. At the end of the day, that's like all that matters, right? It's like how much volume does the pool have? And like a pool like STSOL USDT is like how do you say, like it can get a lot of like volume from related pools due to arbitrage. Like if someone is trading STSOL to Sol, sometimes it'll go through STSOL USDT and then USDT Sol, both pools of which you have. So we could get both or even just one leg of that trade. So it doesn't even have to be like a STSOL USDT trade. It can be a what do you call that? Multi-hop trade. And since there's like so many pools with STSOL and USDT, like it has a higher likelihood of having those trades occur, which contributes to volume. And that's like less true of a pool like WBTC, right? Or like HNT, because they don't have as many other pools that include those tokens. Oh, we got Auto Catalytic in the house. How's it going? Promino says, the rate we're charging for swaps seems to be decreasing. I mean, we rank second for volume, but the fee for SOL-based pools is now only 0.04%. Last month it was 0.05%. Is it that competitive nowadays? Yep. If we are decreasing fees, that means that that fee is optimal, or at least we're testing it. So yeah, that would mean that other pools are quoting quite competitively, concentrating harder. So we do the same, narrow our spread. Good for liquidity, but yeah, kind of unfortunate for us. But yeah, it's not the first time we've done 0.04%. I believe we did that back in the day when Serum was still a thing, and they were the strongest competition, more so than Orca. Possibly like Camino might be contributing to it, because they have vaults, so just like retail just deposits there and sees the giant APR that doesn't account for impermanent loss. And yeah, just like concentrates heavily. Promino always with the good questions. Always keeping a close eye. All right, well, I see your Promino's typing, but anybody else got any questions? If not, probably gonna wrap it up soon. Promino says, can you talk about what's going to happen on May 16th? Will the emissions simply stop and stakers need to unstake manually? I haven't checked, but I assume that's the case. Yeah, I would be surprised if there was a auto release function where we send them back to you. I believe it just remains the same as it's always been, and you will withdraw yourself. Which will also be a interesting thing, I guess, to see like how many. I mean, because there's like what 2,000 people who like did nothing with their flares this entire year. So how many more flares will now just leave them in their vaults, perhaps forgotten about? I don't know. But yeah, the emissions will just stop. The locked flares will be unlocked. And we will see fireworks. Or we won't. Nobody knows. Yeah, I talked about it a bit before you came. Someone was asking if there's going to be new utility or if we're doing anything to prevent price from collapsing. Some people in this Discord even try to psyops people into selling their flares. Some newcomer, some innocent newcomer will come in and be like, I don't know, say some criticism or something. or no, it's more like they would have like a doubt or have a question or something. Be like, isn't flares like not legit because such and such? And then the community member will be like, that's right, you should sell immediately. Only in the Flare Discord. Can I post the AMA immediately after? Yeah, that is what I usually do. So maybe I'll take an hour or something. But yeah, it'll be up soon. No worries. Mad Lads reactions? What do you mean? My reaction to Mad Lads? I'm not sure what you mean. Don't worry, it's not COVID. Autocatalytics says general thoughts on the health of Solana, implications of NFT communities, possible partnerships, etc. Yeah, so actually I mentioned this earlier, but I think Solana is doing very good, technically speaking. The chain has been like super smooth, and the last outage it had was like only because of a bug in the newer version that all the validators were updating to. All the like issues with like heavy traffic and being able to deal with that, it appears that Solana has fixed all that. I mean, like they may bump into it again at like the next maybe couple orders of magnitude more of demand on the network if we see that. But like right now, it's just like quick and localized fee markets, QoS, like they appear to have just solved all the congestion issues and spamming issues. Even with like the Mad Lads Mint, the thing that was DDoSed wasn't Solana the chain, but like the RPC infrastructure. So the Web2 infrastructure. So yeah, Solana the chain had zero issues handling that, which was great to see. Solana really has come a long way, and like there really is no second best when it comes to like UX. It's just such a clear leader, and these other chains, like maybe they have a path to scaling to reach where Solana is right now, maybe, but that's going to take time. And by the time they get there, like Solana, already has all these other plans for like even further improving throughput and cheapness and speed and blah blah blah. So I don't know. Like I always say, like Solana was built based on first principles. It's like the end goal is basically just to create the most efficient, optimized chain, cheapest transactions, fastest speed, and like that's all they care about. I don't know if you guys listen to the 0x Research podcast. I think I retweeted their latest episode, which was with Anatoly. It was great. I highly recommend it. In it, he kind of talks about like value accrual of the chain itself, and this is like something Ethereans often talk about, because Ethereum right now is decently deflationary. There's so much usage of the chain despite the high price of transacting on it that more ETH is being burned than minted as rewards, which is, I think, is pretty incredible, to be honest. But at the same time, I think it is totally unsustainable, and Anatoly thinks the same. Because as a user, like, you use blockchain because there's all these like apps and stuff that you can't really have in the TradFi world. You want the permissionlessness, the decentralization, etc. In terms of decentralization, Solana is, I would argue, as good as, if not better than, Ethereum is. It really depends on like what metric you look at. I think Solana is better than Ethereum in some and worse than Ethereum on some. So it really, I guess, just depends on like what you value for decentralization. But there's definitely metrics on which Solana is ahead, such as the number of validators or the Nakamoto coefficient. So like in that sense, like most of the new people coming in to the world of blockchain, I think the vast majority of them are not going to be highly idealistic. They're not going to be like decentralization maxis. Even if they were, if they had like technical understanding, then it would still be a close call between Ethereum and Solana. But yeah, if like their first priority is not decentralization, what's next? It's usually like UX, which can take the form of either like the cost to transact or the speed at which transactions confirm. And also like the general UX of like apps on whatever blockchain. And like Solana is just like light years ahead in all of those, right? If you look at the transaction cost, it's like orders of magnitude cheaper, speed, it's way faster, and then the UX of like apps and stuff. Like for example, compare Tensor with Blur. Tensor is like way better. I've never used Blur, so actually I don't know, but so I've heard. Or like look at wallets. Ethereum has MetaMask, which is like, you know, universally acclaimed to be trash. And then on Ethereum, you have like Backpack, you have Soulflare, Phantom used to be great, maybe not quite as much anymore. Probably especially because like they're going multi-chain and just like not as focused on Solana anymore. I've heard things about Glow Wallet. I've never used it. And Otter Cash, which I've also never used, but I've also heard good things about. Like the developers on Solana are like, they really care about UX. And like for me personally, I know that hits hard for me. Like I really care about UX. When I first like transacted on Solana, it was just like night and day. And you know, it was only when I got on Solana that I began starting to experiment in DeFi, because it was just like too goddamn expensive to do anything on Ethereum. And then you know, Solana has the phone, which you know has the potential to be huge for mass adoption. Which is really cool. We have Fire Dancer, which will further increase the speed and throughput, cheapness. And then Solana, let's see, they have some SIMDs, is that what they're called? Solana Improvement something. I forgot. But like yeah, there's like other things where Solana is looking to improve. Like they're by no means done. So yeah, like I don't know. Those are my general thoughts on the health of Solana. I think it's looking very good. Implications of NFT communities. I feel like I'm much less informed about that. I probably don't have any insight there. Yeah. Possible partnerships. I'm not sure if that's referring to like Solana partnerships or our partnerships or yeah. Oh well. Let's see. Thugyat says, I'm interested in the answer. Couldn't hear the reply in vocal. If you have a reference or a bit of an answer, please let me know. You can always listen to this recording later. But yeah, basically emissions will stop and then stakers will need to unstake manually. Yes. So same as it is right now, just unstake and withdraw. Bugsia, yes, you can stake your flare today. There's you got like 20 days more of staking, and you can unstake anytime. So, highly recommend that you stake. Get some Lifinity. All right. Well, I guess we're good on the questions. So I'm gonna call it. Thanks, Apramino. Thanks for chiming in with all the questions, and everyone else as well. Always appreciate it. Welcome to Thugs Yacht for just buying the flare. Welcome to the club. Hope to see you around in the chat with everyone else. And, yep. All right. Well, until next time, peace out, guys.